For more on the markets, we cross to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, the local currency has weakened somewhat, about 3 to 4% vis-a-vis the US dollar. Of course, the US dollar has firmed somewhat on the back of what you did say there, Nzinga, about the fact that market participants now beginning to believe that there's a stronger probability of a rate hike in the United States, probably in March. So that has meant people buying more into dollar assets and firming up the dollar as a result. And in terms of our stock market, we see the all-share index in the black. Capitec, which has come under scrutiny for its financing model from the Viceroy Research Group, they're doing a bit better today. Yesterday, they closed down over 12%, but today they were up as much as 4%, which is positive. And interestingly enough, the CEO, Jerry Fourie, he decided to buy 1.5 million rands worth of Capitec shares yesterday, perhaps trying to boost confidence in that stock. Let's take a look at the indicators. I'm joined by Viv Govinder. He's from Rand Swiss. Thanks for joining us, sir.
Thanks for having me.
Good stuff. The Fed Reserve kept rates unchanged yesterday, but indicated to the market that they do see inflation ticking up during this year. So now market participants believing that indeed an interest rate hike is coming and more thereafter. So what does this mean for emerging markets like South Africa? Why should we care?
Look, a rising interest rate in the US is probably going to be negative for emerging markets because it will reduce demand for commodities and also have an impact on the currencies as well. Generally, when you have rising interest rates, you do tend to find the currency appreciate to a certain extent. That being said, I mean, Donald Trump replaced Janet Yellen for a reason. Maybe he might want to keep interest rates just a bit, more lower for longer, because in the short term, rising interest rates are negative for your economy. It helps slow things down, and he wants to try and achieve, significantly, probably above, trend growth for the US, and that probably requires, interest rates being a little lower for longer. And so it remains to be seen what the Janet Yellen's successor will do. I mean, look, she wasn't replaced for any reason that had to do with her competence, her perception in the market, and she probably would have taken the job, had it been offered. But in fact, she would have taken the job had it been offered to her again. So it's possible that we could be seeing, a bit of a trend change after she has left.
Now, globally, we see markets more or less a bit positive today relative to the past couple of sessions. Apart from the US rates decision, what other factors are driving them?
Look, I mean, we've had, for instance, the US has had the best month, basically, in January 2018 that they've had since the middle of 2016. We've had a very, very long up cycle. And in fact, if you had to look back, for the last few months, it's like, trends like, multiple negative days just don't occur. So I think to a certain extent we've been seeing, the market's gone very high, very fast. After the tax, the implications of the tax bill were known, and obviously the market wanted to price that in. But that being said, I mean, I think maybe people are feeling that things are a bit overdone at the moment. And in fact, Alan Greenspan, he's 91 years old at the moment, but he's still respected in some circles, has come out and said he thinks there's a bubble in both the bond market and the stock market at the moment.
And then here at home, Capitec was down 3% at Tuesday's close, down 12% at yesterday's close. Doesn't look very good, but today, like I mentioned, we see that stock up around 4%. Mr. Fourie deciding to buy 1.5 million worth of Capitec shares yesterday. What does this tell you, and do you have questions about their refinancing model? Yeah,
if you looked back in December, you'd find actually Capitec sold a lot of shares. These guys sold a lot of shares around 1,000 rands a share. I think the directors in total, it was quite a large number. I think the number was something in excess of 100 million rands worth of shares was sold in directors' dealings, SENS announcements that came out in December announced about more than that. So obviously buying back at this level, if you sold because he thought it was too expensive at 1,000. They may be thinking it's a little cheap at, you know, like at 800 or so. So maybe that's one of the things, you're buying back what you sold out a month ago and made a, you know, effectively a 20%, you know, differential. But that being said, I mean, the questions aroused by Capitec at the moment are interesting. I mean, it's not just about accounting fraud, it's about whether or not they're actually dealing with their customers ethically with regards to things like initiation fees. The company saying one thing, you know, a couple other reports are saying another. And we're seeing a bit of a divergence even among the established analysts out there. So, I mean, Viceroy is a small group of people, 3 guys, you know, not normal career paths in the analysis industry by any means. But even like a Deutsche Bank is coming out and giving us some very, like, you know, different numbers from what was, we would think the expected price of the company is, or the current price of the company is. So that if a big company like Deutsche Bank is telling you something is a bit off, maybe there is something there that we don't see at the moment.
Indeed. Now, the South African trade surplus came in at 15.7 billion rand for the month of December. That's very good news. But of course, we're now seeing the rand trending firmer. Given that, can we expect that to continue? And if indeed it does continue, surely that augurs well for an interest rate cut in our economy. Yeah,
look, if the rand remains strong, we're going to be under pressure because our exports become more expensive in other currencies and our imports become cheaper. And so people are going to import more and export less. We're also facing a higher, you know, oil price. To a certain extent, the stronger rand is helping us with the higher oil price. If it wasn't for the fact the rand was stronger, we would be experiencing quite significant petrol price increases because the oil price at about $70 a barrel, just under so, is significantly higher than it was for much of the last couple of years. We've been talking about 1.50, below 50 for a while, going to like the high 30s. So we are seeing oil prices coming back quite strongly. Whether it's going to last or not, whether or not there's going to be kind of pullback, who knows? But I think it's going to be very impactful in regards to the current account deficit. And also, I mean, if the rand does weaken and the oil price stays where it is, we're probably going to see some inflation return to the market as well.
But what about the interest rate cut prospect? Because many people say we need that. Many analysts say we need that to actually get the economy going.
I think the market, or the Reserve Bank rather, will probably wait until after we get through the next round of like scheduled, you know, ratings upgradings basically, and the budget speech as well. That gives us a bit more clarity as to what exactly the financial situation in the country is. The market's gotten, or the currency has gotten stronger ever since Cyril Ramaphosa was elected the ANC president. But if you go through a budget speech that says we have a massive deficit and things are turning bad and the revenue is down and spending is higher and we don't know how to get out of this thing, you know, that's going to reverse a lot of the gains we've had in the rand. And so we can't take for granted that the current strength in the rand is going to be something that lasts past even, you know, this month.
Indeed. All right, well, we're going to leave it there. Thank you very much, as always, Viv, for your insights. Some analysts were talking about the possibility of a VAT hike of about 2%. Apparently, that would accrue the economy some 48 billion rand, which would easily solve government's problems. But I don't know if they're going to be prepared to go there. After a short break, Nzinga will have more business news for you.